Kevin Warsh basically has already committed to lowering rates on the Fed funds. How much control does he have? If everyone else is betting on higher interest rates, how does the Fed and how does the Treasury, how do we not have higher interest rates?
It's such a funny conversation last week, in a press meeting with Debasement. Will the Trump administration sue Warsh if he doesn't adequately lower rates?
Oh, wow. There you go.
And Debasement kind of sidesteps the question, is like, well, that's for the White House to decide. As in, maybe.
Wow.
Maybe.
When would a Fed chairman start to get sued by the White House?
It's a bizarre world. But
wow.
Yeah, Warsh is committed to lower Fed funds rate, but he's also well publicized and commenting on shrinking the Fed balance sheet, which adds to an oversupply of debt instruments, right? So in theory, that pushes up longer-term rates. What will the markets look like if they prepare for his coronation in May, trying to anticipate, okay, how fast would he shrink the balance sheet? What's the impact for the yield curve? Do we see a continual sort of stretching of the difference between the 2-year and the 10-year Treasury?
Right.
And that, it's already as stretched as it's been going back to 2022. And so I think it's that number is probably an interesting tell.
So by the
2-year, 10-year spread.
Buy the rumor, sell the news is going to be interesting in May, right?
Yeah. He may want to shrink the Fed balance sheet, but I wonder if such a feat is possible in the context of runaway Treasury issuance. And we've seen this now for a couple administrations. This is not just the 2.32 trillion that was added to debt last year. We had $8 trillion added by the Biden administration.
Right.
We also had $8 trillion added by Trump in his first round as president.
Right.
So
Trump's moving a little faster now, isn't he?
Right. He's single-handedly responsible, or his administrations have been present when $10.23 trillion in debt has been added. Wow. We're not slowing the pace. So how do you shrink the balance sheet and take that supply, bring it to market when you're already oversupplying the markets? One thing that happens in that context is rates rise. So granted, it may be further out on the yield curve and maybe they're not worried about that. But I'm concerned that you start to pressure rates at the long end of the curve, even the middle of the curve, and it has a major impact on corporate finance. And this is where you're constantly
which is the
rolling
duct
over.
tape that's holding everything together right now.
As goes corporate credit, so goes corporate equity.
Right.
So how realistic is it for him to lighten the Fed balance sheet in the context of an oversupplied Treasury market? I don't think it's possible.
Well, and you said privately there's basically preparation for higher inflation, or at least inflation sticking where it is. Gold, through all this volatility over the last couple of weeks, it's doing really well. What's your thought on gold? Because gold also is a signal as to what we see coming.
There's an interesting article in the Wall Street Journal on sort of anticipating higher inflation rates this year. And I printed it off, I read it, and I was completely disappointed. It's like, well, first part of the year, that's when people are raising their prices.
Right.
And then they mention Cheetos and Pepsi, and you're going to see a decrease in prices because they want to recapture some market share. They're realizing that consumers are being priced out of Cheetos and things like this. So,
right.
But their main point was, if you're servicing a pool, if you're going to increase rates, you do it at the beginning of the year, and then that's where you see an inflation. So they're looking at seasonality as a factor for inflation, and maybe that is a factor.
But you're talking more systemic.
Exactly. This is, they're
not Fritos. Fritos went up when, if you remember, toilet paper, Fritos, and hand sanitizer for COVID. You couldn't find Fritos. That was almost a tragedy, But going back to gold, gold is still signaling that there's a long ways to go in this dollar debasement.
Well, gold held up very well last week. Silver remains under some pressure. While and this is very interesting, the miners are holding their own And I think part of that is coming into Q4 reporting.